talking about some of the cable players this year. And if you look at the kind of returns that have been shelled out by something like a KEI Industries, it has been absolutely phenomenal over the last 10 years. A bulk of that, has been resulted in the last 5 years or so. And with reports talking about a big beneficiary, being a big beneficiary from the infra push, how would you like to, explain or give your analysis on the likes of a KEI, RR Cable, Finolex, Polycab, etc., with the kind of valuations as well that they command?
Yeah. So good morning, Avan. So you had to take it with a little pinch of salt that these stocks and their valuations were unjustified for years. And now the real unbundling is coming, where you realize that these are very, very strong plays. And there is a handful or clutch of players with a demand which is surging. And that's across the board, whether it's wireless, telecommunication, and infrastructure. As a disclosure, Finolex and Polycarb are two stocks which are in our portfolio, but from much lower levels. But we still think this whole gamut of infrastructure stroke ancillary plays on telecom, on the whole 5G network relaying, on the underlying, you cannot have Tata Com, which was trading at 500 rupees, now at 2,000 rupees. It is all the underlying assets which have done well, and demographic premium playing out to its best. So, like I said, these stocks have seen very, very sharp run-ups. They are slightly expensive, but you have to factor in 1 year of earnings into them.
Sure, Mr. Bhasin, we were just discussing the retail story and the kind of value creation Tatas have done there. If I had to ask you one pick from Trent versus Titan, which stock would you prefer?
It's a difficult choice, Anisha. Titan is in our portfolio, and we continue to think that is a cheerleader as far as the whole gold and the ancillary sales of. There are four. I don't know how many lakh weddings which are slated, and those weddings have a budget of 4.5 lakh crore. Titan is the biggest beneficiary, and I used to say this before Diwali when Titan was trading below 3,000. If you recollect, that Titan is going to be the biggest beneficiary, and it's the underlying business which the Tatas have foregone. Have unleashed that where you have a total transparent earnings company. Generally, gold loan and gold sellers always had that bit of cash level and so on. But I would go with Titan, and like I yesterday also suggested, I would go with Reliance Retail. I think their base product of investing has played out. Now the returns will come back-ended, and that could be the unleashing for Reliance over the next few years.
Sure, and yes, it was CAIT yesterday who said there are 38 lakh marriages lined up in India, and that could bring Mr. Bhasin on this one. Our technical experts, Kunal, etc., believe Hero is better placed than TVS, and even if you go by the consensus estimates on Bloomberg, looks like the upside is now capped on TVS.
Well, Anisha, that's what everyone has been saying for the last 6 months, but the stock has only been going higher. So, there is a bit of froth maybe on the valuation. But, big is always beautiful, and that's why markets chase new highs. Now, I'm not making the case that TVS is a must buy. Like you said, I go with Kunal. I think Hero has undergone a huge transformation. I still like Bajaj Auto. But I would go with more defensive names. Ashok Leyland in the four-wheeler has been my top pick. I still think Eicher, even though there was talk that Triumph and Harley will take market share, I think Eicher has a brand of its own, and it's doing brilliantly. I mean, all kudos to Siddharth Lal. But I would go with Bajaj Auto and Hero. I think, like I said, TVS on technical levels and on the setup which they have can go higher. But if you're a retail investor, then it's better to buy a basket of stocks rather than just one stock, because right now the valuation may not be in your favor.
Okay, so that's a take coming in. The other one I want to discuss is consumer durables. Of course, real estate stocks have seen a massive surge, but if you can pull up the twin charts of Voltas versus Blue Star, you'll see that Blue Star has managed to actually eke out gains of almost 60-65% this year versus Voltas, which has pretty much been flat. What explains that, Mr. Bhasin?
Yes, see, Voltas had to undergo a lot of changes, and I would still say that Voltas has been an underperformer for the right reasons. But look at three things. One, their market share gain on the air conditioner side. Secondly, Anisha, not many people know that they have a 25% market share in cooling towers in the Middle East. And if L&T is surging because of that, then Voltas is also not getting a fair amount of distribution there. Thirdly, Tatas want to make that the face of their consumer, facing arm, which is on the customer side. And I think that the valuations are still reasonable, given the brand name and the pedigree of Voltas. So if you measure in that Middle East cooling tower business, the whole setup over there, which is almost 20% of their orders, then I think that Voltas can still head higher. We have a buy rating and accumulate. We think this is headed to 1,100 rupees over the next 1 year.
All right, just taking a look as well as to the recent trend of FPI selling that we've seen, and that has been in three sectors in particular: financial services as a space. There's also been IT, as well as some of the fast-moving consumer goods. Sanjiv, if I were to just pick up on one of these, and with respect to the consumer goods as well, how is it that you would look at the fact that maybe festive demand wasn't quite as strong as one anticipated, inflationary concerns continue to remain a huge concern? What would be your outlook in terms of cherry picking perhaps stocks within this space?
So Avan, see, the market is all about sectoral rotation. If you saw yesterday, reality and pharma have hit multi-year highs. Now, I'm not justifying that. So that is at the cost of some sector or the other. Valuations in the consumer space were always expensive and will remain. But like I said, there is a churning of stocks. And when you churn with no fresh impetus of capital, then obviously one will lag and the other will perform. I still think the guidance Nestle gave, the results they've given is going to see that gain market share. I like Godrej Consumer a lot over there. As a disclosure, both these stocks are in our portfolio, in our consumer division, and we think they can be outliers against a Lever or a Colgate or a couple of the other names. We still think Nestle and Godrej Consumer will be the better market performers over there. You can add a Colgate. Actually, I meant to say Colgate is a buy. But like I said, there is sectoral rotation. Pharma and reality are seeing much more delta. And that is what you have seen lagging in the consumer space. I still think the wedding season and the impetus going forward with the festive season will see these stocks, regain their momentum. But like I said, earnings may have priced in the best for some time.
Colgate is up 40%. I didn't realize it actually. Let's look at Patanjali. And it's the other way around. The Patanjali Foods, by the way, but the oral care business, with its Dan Kranti, the biggest brand, that's out. And that is out of Patanjali Foods. Everybody is talking about Ayurveda, health, going organic, but Colgate has done much better than Patanjali this year. Bhasin Saab?
Bilkul, when I joined the stock market, there was only one stock which investors realized is it used to give bonuses every 3 years. Of course, that time it was 50, 70 rupees. But Colgate has been the best play on India's demographics, the type of, brand they created, and no question about that. There was always this talk that Patanjali will eat into their share and Lever and so on. But I still think there is no stock like Colgate. It has rewarded investors, Nikunj, and it has only increased its market cap. So I continue to stay invested in Colgate. Patanjali is a very, very strong play, and all kudos to Baba Ramdev for being an exceptional, Ayurveda practitioner and a businessman, because he has created value. But like I said, in the Indian demographic, there is room for both to survive. Market will still go with Colgate.
Okay. Patanjali 14%. Actually, Colgate, I didn't realize it, man. I mean, I just did not realize it. It is so amazing that if you look at the higher flyers of this year, they are the real backbenchers. Coal India, backbencher. NTPC, backbencher. Suzlon, backbencher. The real underdogs who were really off the radar. I mean, folks had stopped tracking them. I mean, Colgate had become it was not on the radar for most of the brokerage analysts also. And that's the time these stocks have made a comeback. Look at it. NTPC 50%, Suzlon 270%. The year really belongs to the backbenchers. Bhasin Saab, backbenchers. School की बातें याद आ रही हैं.
बिल्कुल बिल्कुल
You were
और
a
आपने
backbencher or you were
ICPF
always a good student in the front bench?
बिल्कुल I used to know I used to be a good student, but because of my height, I was sitting at the back benches and always more keen on what the matches were outside. But Nikunj, that is the unraveling of the market. REC PFC are up 3 times in the last 2 years. 3 times, 300%. किसने सोचा था power will make such a big comeback? और अभी भी मैं सोचता हूँ there is room for appreciation. And if you give me permission, I'll give you one stock which I think is a growth stock which can be an outperformer in 24. However, it has been an underdog of a stock. But we just heard the commentary. We are participating in the management presentation today, and I think that stock investors should have a look at.
All right, Bhasin Saab, really appreciate your time. Thank you for joining us. Chakri Lokpriya